assumption that you are new to options and therefore know nothing about options. For this reason, we will start from scratch and slowly ramp up as we proceed. Let us start with running through some basic background information. The options market makes up for a significant part of the derivative market, particularly in India. I would not be exaggerating if I were to say that nearly 80% of the derivatives traded are options and the rest is attributable to the futures market. Internationally, the options market has been around for a while now. Here is a quick background on the same. Custom options were available as over-the-counter (OTC) since 1920. These options were mainly on commodities. Options on equities began trading on the Chicago Board Options Exchange (CBOE) in 1972. Options on currencies and bonds began in the late 1970s. These were again OTC trades. Exchange-traded options on currencies began on Philadelphia Stock Exchange in 1982. Interest rate options began trading on the CME in 1985. Clearly, the international markets have evolved a great deal since the OTC days. However, in India from the time of inception, the options market was facilitated by the exchanges. However, options were available in the off-market Zabadala system. Think of the Badla systems as a grey market for derivatives transactions. The Badla system no longer exists. It has become obsolete. Here is a quick recap of the history of the Indian derivative markets. June 12, 2000 index futures were launched. June 4, 2001 index options were launched. July 2, 2001 stock options were launched. November 9, 2001 single stock futures were launched. Though the options market has been around since 2001, the real liquidity in the Indian index options was seen only in 2006. I remember trading options around that time. The spreads were high and getting fills was a big deal. However, in 2006, the Ambani brothers formally split up and their respective companies were listed as separate entities, thereby unlocking the value to the shareholders. In my opinion, this particular corporate event triggered vibrancy in the Indian markets, creating some serious liquidity. However, if you were to compare the liquidity in Indian stock options with the